Will Bitcoin get to $1 million per token in 90 days? Or will Bitcoin head down to create new lows? We've got two prominent individuals on crypto Twitter taking both sides of the spectrum. In this video, we're going to break down which one is more likely and what my opinion is on where we could be heading. You've got Balaji coming out and making a remark such as Bitcoin will hit $1 million in 90 days. You can go ahead on his page, you can read the full threads and his rationale behind it, a lot of which I agree with. And then on the other end, you've got El Capo, who's finally tweeted after a very long period of time. Despite all the noise, I know that the vast majority of those who follow me are genuine good people. I remain bearish and fully out of the market. New lows are still likely. Which one is more likely? Are any of these cases likely? That's what we're going to get into this video. What I've just shown you here is two extreme individuals. Somebody who's coming out and giving a crazy price target of we're going to $1 million in 90 days. And then on the other hand, you've got somebody who's been an extreme bear in El Capo for a very, very long time. He kept saying throughout, we're going to hit new lows, we're going to hit new lows, we're going to hit new lows. And guess what one of the biggest diseases to any successful investor is? It's stubbornness. It's ego. It's not letting go. It's not adapting to the data and being data-led. And that is what we're seeing right now. We're starting to see people come out and stick to their camps. People were following Balaji. No, we're going to $1 million. People following El Capo. Oh, we're definitely going to create new lows. I'm not going to go in the market. What if the answer is neither? What if the answer is, in fact, we're not going to go to $1 million in 90 days, nor are we going to go back to 15,000 or lower? Maybe we're just going to be in between. Maybe we can work to 30,000. Maybe we can work to 32. You've got to be data-led, and following these people, trust me guys, I know they've got a lot of clout. There's a reason they've got a lot of clout. There's a reason this tweet has 500,000 views. And there's a reason Balaji's following is growing and growing as well. It's not necessarily because of the data provide. It's them being sensationalists. Sensations sells. You know this from newspapers. You know this from clickbait. You know this from everything else. This is what sells. But you guys, as the audience, you're the ones who ultimately get hurt. You don't know what they're placing as trades. You don't know how they're investing. They're growing their following. But for you guys, I want you to be data-led. I want you to be rational. Follow the charts we're saying and take it step by step. For example, we know we're forming this inverse head and shoulders pattern. We know we're in this chart pattern and we know we can take the measured move and this will take you to a price target of 35. So making a sensible price target of saying we're going to work to 35 is sensible. It's data-led. Another way to look at it would be like, I'm taking my Fibonacci ratio from swing low all the way to swing high, and I can see the golden pocket is sitting between 48 and 50. So medium term, would it be irrational to think Bitcoin could work its way towards 48 and 50? Absolutely not. Would it be irrational to work its way up towards 69? Absolutely not. But just shouting out that Bitcoin's going to get to $1 million or it's just going to go back to swing lows for no reason. Where's the rationality behind this? Where is the data-led approach? Now, it's also okay if you want to be a bear. I'm not saying everybody has to be a bull. You can be bearish at times, but please let that be data-led. For example, if you're looking at the EMA ribbon, and you're saying, okay guys, if we as bears can hold this EMA ribbon, then maybe we can push towards new lows. Okay, granted. But first, you've got a lot of levels to clear before here. We are 12 hours away from closing this weekly EMA ribbon above. We're going to flip this back to bullish again, which is huge. This is what I said throughout this period from 15,000 all the way up into the EMA ribbon. This was a relief rally, and I said that. We're rallying against the trend, which is exactly what El Capo was saying. The difference with El Capo is he's not willing to adjust with the data. Right? Because he's already created all this emotion, all this hype. His character is to be this bearish person right now. People expect that from him. They'll be so disappointed if he was to change his mind and change his data approach. Do not let yourself be caught in that. Don't let yourself be bucketed as a permanent bull or a perma bear. It's not going to do you any favors. Because now we are 12 hours away from reclaiming the CMA ribbon. This is no longer, on my definition, a relief rally in a bear market. Right? That is not what this is now. Once we close this in the next 12 hours, barring a huge collapse throwing us back into our EMA ribbon, which is still possible, right? The bulls are going to be in control. Now, for the bears to be in control, they had to hold this EMA ribbon. Now, there is a chance we can be neutral. There is a chance we can be neutral. And again, this is not going to get any views, right? People don't care about the neutral argument. But what happens if you're neutral? If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube, everything is about retention, whereas with a course, you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. Neutral is if you have a sideways trend. We lose that EMA ribbon on the weekly, we get it back. There is that possibility. Why does nobody talk about this possibility? Because it's not sensationalistic, is it? Nobody's going to care if you say, oh, we're going to reclaim our EMA ribbon, then after a couple of months, we're going to lose it again, and we're going to spend a year going sideways. It's very possible, but nobody wants to talk about that. There is every chance here, like I said, there is a gap to fill on Bitcoin once we close this EMA ribbon up towards that 30,000 range. I've spoken about it. There's a clump of resistance here. In fact, you can see a little bit easier here. This clump of resistance starting from about 28, finishing out at about 32. So there's every chance that once we play out from this channel, we play out from the inverse head and shoulders pattern that I've been showing you, we can work our way into this clump of resistance and we can face some trouble. And then there's every chance that once we get here, we can also come back down and spend some time here and then go back up. Like, we could be sideways for a long period of time. But that's the boring approach, right? Everybody wants to say, no, what's really going to happen is we're just going to explode from here and run all the way to upside to 1 million, which is ridiculous. Even if somebody said we can break all-time highs, I think that's okay. That's not crazy. Even $100,000, you can make the argument for it if the US go on a crazy binge of printing again and they're easing monetary policy, they go back to 0%. Of course, Bitcoin's going to benefit hugely from that. And I'd expect Bitcoin to surpass 70,000 and beyond. So I can make the argument for that. But to just be shouting out $1 million when we've just recently been fighting for 15,500, that's just sensationalistic. Okay, so the message I want to heed for here now is we've got to be able to block those out. Have these wipers where you read their content, you look at the details, right? I'll go through his content. That's not a problem. I'll read through here and I'll agree with a lot of what he's saying. The banks were insolvent. Absolutely, completely agree. Regulators knew the banks were insolvent. Completely agree. They're lying about the printing. I agree. They lied to an extent, right? Because really they're putting 25 billion, but when you leverage it up, it's really having a $2 trillion effect in terms of stimuli that they're putting into the economy. Of course, I'm sitting on the side of Balaji in terms of a lot of the fundamental points he's making, but I can't sit there and just shout out, we're going to head over to $1 million. That's not where we're sitting right now. Right, so we are heading into a very important week. We've got the FOMC meeting on Wednesday the 22nd. Very, very important meeting. 60% of the market pricing in we're going to get 25 basis points. 38% of the market is pricing in a pause. Please be very careful between now and Wednesday. What I suspect happening between now and Wednesday is that the market will start to price in more of a pause. If the market, this is the risk, if the market prices in more of a pause, then what's going to happen is we'll get disappointed if we don't get a pause, and you could see some redness in the market even though we get 25 base points. The opposite is also true. If this percentage climbs to 80%, 90%, and then we do get a pause, markets can rally, it can go crazy because the markets weren't expecting the pause. So remember, it's all about what investors are pricing in and what they're expecting from the market. Right now, 60% expecting 25 base points, so it's not going to be a huge surprise. But this 38% who are expecting a pause will have to unwind. Right? So there would be a little bit of sell pressure on those days for those people who are expecting that pause. It will surprise them. I'm personally not going to sit on the fence. I'm going to say I think we're going for 25 base points. I think we're going to get another 25 base points and potentially another one afterwards. We saw with the ECB that they plugged on in Europe and did another 50 base points last week, despite what was going on with Credit Suisse. So I think the Fed are going to want to do the same. I think Jerome Powell's going to want to do the same. He won't want to indicate to the market that something's breaking. If he pauses suddenly, the market might go, hang on a second, have you broken the banks? There's something going on that we don't know about. So I think they could read into that negatively. So even with that pause, we could see a negative connotation being brought around it. Say, why are you pausing? Whoa, 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 what's going on? Is something broken? Is there something we don't know about? Is there more systemic risk amongst the banks that we need to think about? So that FOMC meeting, we will be covering live on the channel. Make sure you subscribe with the notification bell on, because sometimes when I go live, YouTube plays dodgy games and they do not notify you that I'm live, which is not fun. So make sure you subscribe, bell notification on. Make sure you're in our Telegram. Make sure you follow me on Twitter. Get on all those social links in the description so you're not missing any alpha. I post chart patterns in Telegram. I'll post stuff on Twitter. I'll put stuff in the Discord as well when I'm not making videos. Fear and greed index is sitting at 63. The market is, of course, very comfortable right now. We're sitting in this $27,000 territory, but I do want to share with you some of the downside scenarios just so to make sure we're on the same page, right? You guys know it's not just about mooning. Even though we're in a very good setup here, we're nearly very close here, maybe by the time I've uploaded this video, to reclaiming that EMA ribbon. Huge step for Bitcoin, breaking through that 25,000. But what are the downside risks? I mean, the first and foremost is a slight retest. right? What about a retest of this trend here? Come back to 26.5, retest, and then bounce. Fine, that looks like a sensible approach. How about if we look at our inverse head and shoulders? Same thing. What about a retest at the neckline, which will bring you down to 25,000? Again, I wouldn't panic at 25,000. So what? If it wants to come back and collect and retest 25, which is such a difficult resistance, why would you not want to retest it and turn it into support? Of course I'd like to see it. I know it'd be painful. It'd be a nice opportunity for me to nibble a little bit more, but I'm happy with that. If I see that, no problem whatsoever. What would be bad is if we fall below 25 and invalidate this head and shoulders pattern and start trending below it. I don't expect that to happen just yet. The momentum is with us right now. The other thing you want to look at is this ascending wedge, right? And if we bring out the EMA ribbon, where do you see support coming in? The EMA ribbon provides support at 24,000. We are so very extended from our daily EMA ribbon. And this is what people are forgetting. We are very overstretched right now. RSI is very overbought if you look here where my cursor is. So again, I wouldn't be surprised even if you wanted to come down to 24 on the EMA ribbon. So when you look at these levels, you start to create rationality in your mind. So if the market did fall over the next 24, 36 hours leading into FOMC, I'm not panicked. I'm patient. I know we're still in an upward trend. Hopefully we can reclaim our EMA ribbon on the weekly time frame. On a daily time frame, we've got plenty of room to come into our EMA ribbon and bounce and go create a higher high. So things overall are looking good. Couple that with the macroeconomics and the Fed struggling with the banks, having to ease policy again, potentially pausing in the next couple of meetings. We've got a roadmap to Jerome Powell and the Fed being our friends, which spells good times for liquidity and good times for Bitcoin. Really exciting week coming up this week. Let me know in the comments, are you expecting the pause? Are you expecting 25 base points? Thanks for watching, and I'll see you in the next one.